I'm Owen Bigland. This is the Inside Edge video blog. Okay, I don't want to beat this horse to death too much. I have been talking about the importance of keeping your eyes on the big picture, thinking long term as opposed to short term. But I want to hit you with another blog here. I'm pretty charged up after my recent trip to Manhattan, like every year I am when I get back, rubbing shoulders with some of these incredibly successful people, optimistic doers, and a lot of that rubs off on me for several weeks after I get back. And, you know, at this investment conference, like every year, I've told you guys that these are value investors. This is a private equity firm that invests and holds quality U.S. and international companies, collects the cash flows, buys more stock when they're on sale. They're not speculators or traders or shorting stocks or getting in and out. And over the course of the weekend, like every weekend when I've gone to New York for this, they're always pounding home the long-term view. Always. They don't think short term. They're not traders. They're looking out 5, 10, 15, 20 years on most of the companies that they're buying. So these are companies like Johnson & Johnson, Procter & Gamble, Apple, Visa, Home Depot, Costco. This is just a snapshot. McCormick. These are some of the companies that they're holding in their core portfolio. But of course, we're now well into fall, heading into winter 2018. And when it comes to Vancouver real estate, of course, there's still a lot of it never does let up. But there's always, more chatter about the market in correction mode. We're headed for the big one, 50, 60% correction. And I also see it on my YouTube comments. I've blogged about this a few times. It's kind of the old analogy, some people you just can't reach. But this is what makes doing this video blog fun for me. I've got a core following on this blog, and I've been building it up over the years, and people are aligning themselves with my way of thinking, which is the right way of thinking as an investor, and what real estate can do for you if you just buy and hold it, just like what buying good S&P 500 companies or TSX companies will do if you just simply buy and hold them for long periods of time. But I get comments from people that when I see them, I think this, unfortunately, this guy is just not connecting. But part of the fun for me is to try and convert more and more people over to the right way of doing things. And that's why I wrote my book. And again, remember, it's not theory for me, it's practical. These are things that I've been using for over 30 years. And I've learned this from other successful people. So this stuff works. So I'm going to meander around a little bit here. Please stay with me, but I want to get a few things, addressed here to my viewers. First things first. It reminded me, and I had to go back into my library a little bit, and I've talked about it a lot of times, the difference between an investor and a speculator. And, again, what buying and holding quality assets for long periods of time, monitoring them, living your life, enjoying life, looking at them 20, 30 years, and you will be blown away with the returns. And don't worry about what markets do, whether that's real estate or the stock market, what it does for you in the short term, next month, next year, whatever. Those things pass. That's what you get when you invest your money. Whether you invest your money in real estate or S&P 500 stocks or just buy the broad index, the incredible returns you're going to achieve over the next 15, 20, 30, 40 years come with a price. And the price, like any market, is going to be, it's not going to go up every year in a straight line. If you want these incredible returns, you're going to have to put up with some volatility. You're going to have to put up with some years where you lose money, where that investment property or that S&P 500 index is down 10 or 15%. That's the price you pay to get superior returns in the long term. And that's why I've always said that traders or speculators or short-term investors eventually always get their heads handed to them. You can't time markets. Nobody knows where it's going to go. These guys in the room in New York are some of the smartest guys there are on Wall Street. And they bring in some people that talk about real estate. None of these guys can predict with any accuracy where the market's going to go in the short term. Nobody. Anyone that tries to tell you that is lying to you. They've got a 50-50 shot at it, some of these people. They've been calling for a correction in Vancouver real estate for the last since I can remember, but for the last 3 or 4 years, it's like saying that it's going to rain this fall in Vancouver. 50-50 shot, but yet they've continued to be wrong for so long. And if you've listened to some of these guys for the last 4 or 5 years, you've missed out on 100% gain here. So eventually the market's going to correct 5, 10, 15%, but you're still down 85%. It's why you always want to be in the market. Buy, hold, monitor, and then look at your results 20 or 30 years down the road. So let me cover a couple of things. The great Warren Buffett. I always like to talk about Warren Buffett. Let's face it, if you don't want to take my advice, how about Warren Buffett's advice? Greatest investor of all time, bar none, and one of the wealthiest individuals in the world. Warren Buffett, when it comes to home ownership and the stock market, if you were a 25-year-old and had coffee with Warren and asked Warren, what should I be doing? I'm 25 years old, I'm working, I'm out of school. He's going to tell you a couple of things. He's going to tell you that, first off, you should be, if you're going to live in a city for any length of time, 5, 10, 15 years or more, you should be an owner as opposed to a long-term renter. Nothing wrong with renting in the short term, 1 or 2 years while you get your down payment together. But if you're going to live in a major city, an expensive city, like a Vancouver or a Toronto or a Los Angeles or a San Francisco or a New York or Miami or whatever, then you need to be an owner. You should buy your principal residence. That's what he would tell you. Second thing he would tell you is you should also start putting your money away into the greatest wealth machine known to man, which is the US stock market, the S&P 500, the NASDAQ, if you're in Canada, the TSX as well. Best way to play that is just buy the broad index, buy the S&P 500, buy the Dow 30, buy the TSX 60. Buy it, monitor it, keep putting more money in. Any corrections we get over the next 30 or 40 years where it's on sale, buy more. Look at it as a buying opportunity. That's what he would tell you. And if you want to get a little bit more advanced down the road, sure, you can start buying some individual stocks that are going to pay a little bit higher yield. He would probably recommend to you buying companies with strong cash flows, wide competitive moats that pay you a dividend and increase that dividend every year. I cover it in my book. These are formulas that are guaranteed 100% to make you wealthy. Guaranteed. They're simple formulas. But he had an analogy, and I had to go back and look at one into my library to pull it out. But Warren has a pretty interesting analogy on the difference between a speculator and an investor and how it ties to real estate and stocks. He used this analogy on why you want to ignore short-term market volatility because it doesn't mean anything. You know, he says you get up in the morning with your cup of coffee in hand, walk out onto your porch to pick up your Wall Street Journal. There isn't a little man across the fence on your next door neighbor there saying, I will give you $862,000 for your house today. You ignore it, go back in and read your paper. Next morning, you come out to get your paper and there's that little man and now he says, I'll give you $683,500 for your house today. This goes on every single day. So what he's pointing out here is how ridiculous it is. Even if he did, there was a little man telling you what he'd pay for your house every day. Who cares? It's your principal residence. You need a roof over your head for you and your family. The nice thing about real estate is that it's an incredible investment over time. Not only is it's doing double duty, not only is it providing you with shelter and stability, where you're not living like a gypsy and getting kicked out by your landlord, but it's over time a hell of an investment. That's what Warren Buffett would tell you. So ignore the short term, what the market's going to do every day and what the price of your house is. Why would you pay attention to it? Even if it's an investment property, he would tell you. If you've got a tenant in it, you're collecting the rent checks, the tenant's paying down most of your mortgage and your holding costs. You might have to supplement it a little bit if you're in Vancouver, but you're getting capital gains over time. Not every year. We're going to get a downturn here in the condo market and the prices are going to go down 10 or 15%. But who cares? That's short-term thinkers. Keep a tenant in there for 25 or 30 years, then call me up. I'll let you know what the house is worth or the condo is worth, and you're going to be blown away by it. So if you've got a tenant in there, hold it. You're doing what you're supposed to. You're making money. So Warren went on to say, well, unfortunately, a lot of people, you wouldn't look at your house that way on a day-to-day basis. It'd be ridiculous. But a lot of people should also take that analogy with their stock portfolio. But the downside is, of course, with the stock portfolio, we do have a little man over the fence. It's called the market. And every day, 5 days a week, your stocks are being valued right down to the last penny. Warren suggests, and I agree, you ignore that. Focus on the fundamentals of the companies you own. Focus on the cash flows, the profits, the dividends, the payout history. Monitor the stocks, and on corrections on these good S&P 500 companies, or just buy the index and hold it. And if you do get a correction, buy more. Think of it as a good buying opportunity. It's on sale. So I love that analogy, and I want people to think the same way. Now, let's go back to some people that I'm not going to be able to reach, but I'm trying to. That's my goal with this blog. So here are some of the comments, and I've talked about this before. Here are guys that just don't get it. I'll get a guy that'll comment on my YouTube channel saying, "Oh, and you're still pumping the tires on the real estate market. You got to earn your commissions," which of course is ridiculous. I have no lack of clients, and I don't need to pump any tires. But he would say, what would you say to the guy that bought a $1.5 million condo and had to sell it 3 years from now for 1.2? Well, I would say if it was 3 years, he wouldn't be a client of mine. I educate my clients going in, and I've blogged about this so many times, that when you buy real estate, just like when you buy a S&P 500 index fund, you're going to be buying it for the long term. You should care less what it does a year or two from now. You know, plan B would be if he did, through unseen circumstance, have to move, a job offer back in Montreal or Toronto, and the market's down, then plan B is to rent the property out, wait for the market to recover, which it always does. I'll call you when it's ready when the market's recovered, and we'll sell it then at a profit. That's the thing with real estate. It's forgiving if you give it enough time. But in the short term, 1 to 7 or 8 years, all bets are off. So always buy it with a long-term horizon. Just when, like when I pull the trigger on Bell Canada or TELUS or Royal Bank or TD or Johnson & Johnson, I'm keeping those shares for the long term. The only time I'm selling is if they cut the dividend or the company collapses. As Warren Buffett says, and it's rare that I ever sell, just like I don't sell very little of my real estate over the last 30 years. Why would I? I've got good tenants in there, I'm collecting cash flows, and the property's not every year, but over time we're going up. I'm making some incredible capital gains on it, and I enjoy my life. I'm not sitting at my computer looking at what the prices are. I'm too busy working and having fun. But as Warren Buffett would say, these good American companies, monitor them, but you generally don't have to do too much to these companies. Because as Warren Buffett would say, they are so profitable, the cash flows, the competitive moats that they've got, that even a ham sandwich could run this company and you'd still make fistloads of money. And Warren would always go on and say, because one of these days, eventually, if you hold it long enough, a ham sandwich will run the company for a short period of time. Stock goes down during that time, just buy more, as long as the fundamentals really haven't changed, which they rarely do with these big American S&P dividend aristocrats. Second thing I'll get people that will, on the topic of you can't reach everybody, they will send me graphs, charts, saying, "Oh, and I'm worried the market's going down, I'm renting, but I'm not going to buy because look at this graph here. There's going to be 2,000 pre-sales coming online in the next 18 months. Or Canadian debt levels at all-time highs, the tariffs, the pipelines, new unwielding taxes." It never ends. You have to understand that. These doom and gloomers that are out there, that cherry pick all this negative information, why are you listening to these people? This is life. There is never going to be a time, ever. I've never bought a piece of real estate or bought a stock in my life over 35 years where there wasn't some dark clouds or some negative news on the horizon or currently undergoing some problems. If you're waiting for some blue sky, sunshine, all green lights to go, you're never going to have that. It's never going to happen for you. It's absolutely ridiculous. Who cares? 2,000 condos coming online in the next 18 months. I don't even know what this stat is. It's ridiculous. It's made up. First off, they must be talking about the entire Lower Mainland, every city in the GVRD, because it's certainly not downtown Vancouver or in the downtown market or even the Vancouver market. And even if it is, who cares? These units over the Lower Mainland, these were all pre-sold years ago. I have 5 clients right now, 5 clients that are waiting on pre-sales, waiting on the keys. We've bought anywhere between 18. I've got one that we're going close to 4 years now on in Coquitlam. They've been pushing it back. We're getting ready to get the keys in possession on it over the next 6 to 8 weeks. Finally, it's been delayed 6 or 7 times. But 2 of my buyers are going to be living in the unit, and 2 of them are investors who are going to be putting tenants in there. They're not speculators, they're not flippers. That's not to say that some of these units coming online aren't, but I would venture to say that 90% of those units will either be owner-occupied or investors. So they're not going to be coming on the market, and the 10% that do will be absorbed very quickly. But if you're basing your decisions on things like this, external factors like pre-sales coming online, or Canadian debt levels, or more interest rate hikes, those are always going to be there. You are going to be permanently frozen on the sidelines. This is life. It's out there. I'm aware of these things. But I would never, ever let these things influence the things that I can control, which is earning a living, saving my money, investing my money, getting it working for me, and when I get the money together to buy another stock or another investment condo, I could care less if it's a buyer, seller, or balance market. I'm going to pull the trigger, just like my savvy investor clients all do, and we're going to hold it for 20 or 30 years. Then we'll take a look at it. You need to understand this stuff. I'm giving you guys the straight goods here, and I know my loyal followers realize that because I pick up new clients every single year that I've kind of converted over to the light, gotten out of the dark side. If you can't get over this and start ignoring a lot of these external factors you have no control over, you're going to have a very difficult time moving forward. You are. I talk about it in my book. Start learning this stuff. Maybe I can be one of your catalysts, but why don't you start following other successful people? Start talking to other people. Start buying some books, reading some autobiographies. I think you're going to see that what I'm telling you is what these guys are telling you. But for the life of me, I don't understand why anybody would be taking advice from someone who has not been there and done that and is sitting in their parents' basement or some dark rented condo, spewing out a bunch of market stats and graphs, and it's ridiculous. You need to get away from those people. You've got to be an optimist. Every single guy that I rub shoulders with in New York, these high net worth guys, they're all got a lot of things in common. They're all optimistic and they focus on what they can control. They know that there are all kinds of negative things on the horizon, but they're always going to be there. Some of you have only been into and looking at these things for a few years, and unfortunately you're going to find out if you stick around with some of these doom and gloomers too long, you're going to be in serious trouble. Some of you guys have been listening to some of these local doom and gloomers here for the last 3 or 4 years, telling you that the correction's just around the corner, and you've missed out on about an 80 to 90% return already. We're going to get market corrections. You have to remember that. Like I said, if you want to participate in the Vancouver real estate market or the S&P 500, you have to get used to some down years. It's par for the course. That's the price you pay to get the returns. If you bought my book, in the first chapter I talk about 2009. My stock portfolio was almost cut in half. And we're talking 7 figures here. Did I lose any sleep over it? Not at all. Didn't lose a night's sleep. As a matter of fact, I was buying stock during that time. 2009, 2010, 2011, whatever I had, I was putting back into good quality companies. And it's recovered then, and 4 years later it was fully recovered, and it's been off to the races ever since. But that's what you sign up for. Plus the fact that I talk about it in my book, I'm interested in the cash flows. I could care less really about what the value of my portfolio is. I look at it from what that portfolio produces for me every year in the form of dividends and the increase in dividend flows that I get. Just like with my rental properties, I don't really pay too much attention to what the value of my units or my homes are. I look at what my tenants are paying me on a monthly rent basis. And once you start paying off some of these places, and this money is free cash flow, that's when life starts to get sweet. Send this blog. Everyone has people that are sitting on the sidelines listening to these negative naysayers. You want to be aware of these negative clouds, but don't let it cloud your judgment and what real estate and what the stock market can do for you if you simply buy it and hold it for long periods of time. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.